Hello everyone, welcome back to my YouTube channel. My name is Rajat and today I am going to tell you about obviously credit scorecard models. But what is the topic for the day? So the topic is going to be what should be your answers when you are sitting in a credit risk interview. I already covered about what is model development, how model development works, and in previous 4 video I break down the nitty gritty each and every step which is basically being used in the model development area. So what's left? So the thing left is that you should be having a understanding of the ecosystem. Now understand what are the answers you need to give, and when somebody asks you a specific thing, even if you are not working in the credit risk area. So without wasting your time, let me take you forward. And okay, so this is my whiteboard. Usually that's how I call it. Okay, so in this playlist I have already spoken about what is credit risk. All the followers who are watching me, all the subscribers, they know this. Credit risk is covered. Then probability of default is also covered. Loss given default is also covered. Exposure at default is also covered. And then model building. How we build the model. So for that we have 8 major steps like data gathering, model creation, calibration, validation at the end. All those things are also covered. So all these things seems to be very small by name, but if you go them one by one, it's very huge. Now once you go through all this concept, okay, now obviously the question comes is that you have learned so many things, so how to use them? See, using something and learning something is two different things. So you should be having a clear view that what are the answers you should have for your preparation when you are going for interviews, right? So let's start with the top 4 to 5 questions which I have prepared actually that you need to keep in your mind when you're going for any of the interviews in Wells Fargo, JP Morgan, Citibank, HSBC, Standard Chartered, or ANZ or Commonwealth Bank, all of them. Okay, so these questions will help you everywhere. Now you will mention obviously that you are a model developer. What type of model developer? Non-regulatory. Non-regulatory. Now what is non-regulatory? The models which are not driven by regulatory body of any country are known as non-regulatory models. So these are of two type. Number one is application, which we basically covered in previous video, and behavior also. So these are the two most famous non-regulatory models. So this answer which I'm going to tell you is for the non-regulatory model. Then we have regulatory model, that is altogether different ball game. I'll just tell you the name of the regulatory model, but let's not go in deep because let's keep the video to the point. Regulatory models are like if you are working in IFRS 9, you are working in CECL, of any of these sort of like Basel, all of them. Now come back, non-regulatory model. So you mentioned that you're working for a team of model developer. Now obviously the question can come that as a model developer, what are the teams you are regularly talking to? What are the teams where you need to talk regularly to keep the show running as a model developer? So I am keeping model developer in the center. This is model developer. Let's talk one by one. So the number one people whom model developer usually talks are model owners. OWNERS. Who are model owners? Model owner are those people, they basically check the output of the model and they need to take all the management level decisions. So all these people like the CXOs, all the executive level peoples, they need to take, they use basically, I would say in this way, use the model to take management level decision. It can be anything. Like for example, if you have a loan portfolio and in loan, let's say any particular type of loans are not doing good. For example, auto loans are not doing good. So they need to check it. They will take a decision that maybe we should not focus on this particular portfolio for at the moment because it's not generating so much of revenue. So this is kind of a management level decision. Okay. So these are model owners. So the model developer team usually have a call with model owners. So that is team number one. Now team number two is model users. So sometime model owner and model user can be the same teams, okay? But usually model owners are big shot people in the bank, like all the big executive, like chief operating officer or head of analytics, head of retail analytics. All of those people are model owners. Model user can be a normal validation team also, collection team also, and big shots also, all of them, okay? So model, so here the example would be that what they do. So they use the output for business decisions, not management level decision. They use for business level decision. Like for example, you have collection team and some people are not paying the loan back. So collection team will take a decision that send some bouncers to this person house so that they need to recover the money. So that is one of the example. And also management level decision can taken by model owners. So they are also kind of a model user. So these are the second. This is number one. Number two, developer have a connection with model users also directly. Number three is model data owner. These are third type of people. So in every bank you will see usually data teams. Their work is to load the data into a central data repository from where the model developer or any reporting team also will use their data to do the monthly reporting, weekly reporting, daily reporting, all of that. So model developer usually talk to model data owner and they ask them to send the data so that they can run their model on that particular data. These are the third team they usually interact with. Then they have a implementation team. What is implementation team? This is also known as, we call it as a IT. So what is a rule of IT or implementation? They basically do a user acceptance testing. So that is a kind of a testing team within the model development environment. So this team implement model into production system using the test cases. So we can say it implement the model into prod and UAT. This is the fourth team model developer interact quite often. Then you have a fifth team, which is one of the most highest paying job, that is model validation, MV, we call it MV. And sometime this model validation team have a individual review as a sub team. There is a small team which is totally based off individual review. What is the role of model validation? They need to check the model is working fine. They need to validate all the values are perfectly working. So they use all those tactics like KS, then Genie, then PSI. So many of them model validation techniques. Okay. So these are combination known as model risk. We call it combined MR, and short form is like breakup is MV plus individual review. Okay. Now one last team, they usually work with external teams. So they can be external data bureaus like TransUnion and Equifax, Experian, all of them. So now how many people model developer usually work? 1, 2, 3, 4, this is 5, and this is 6. So a single model developer or the manager of the model developer team will be interacting with model owners, model users, data owners, implementation or IT team, then model risk team or model validation team, you can call it, or the external vendors, which are maybe any of the data bureaus. They send the data. Okay, so this is very important and all of you should know it. This is a very important thing, guys. Nobody is teaching all of this on YouTube, so I would expect some like from all of you and some comment. Okay, so this was the bit about life cycle. Now let me talk about some important point again. This is a very important point. Like, what is the role of data bureau? People usually ask this, and in my previous video also I mentioned about that we are taking data bureau's help, and every bank usually take the help from the data bureau to understand data more and more. So data bureau can be classified on the basis of USA market. See, US is the biggest banking market in the world. So in USA there are two type of data bureau. One is consumer. These are the big one. Then you have commercial. So there are two type of data bureau. One is consumer, then you have commercial. In consumer, the most famous one is Equifax. Then second is Experian. Then third one is TransUnion. All these three are majorly into consumer data. They sell consumer data to the banks. Now what are commercial? So number one is PayNet. The owner of PayNet is Equifax. Because Equifax purchased PayNet as a company. Now Equifax is one of the biggest bureau overall if we combine together. Okay. So this is one more thing you should know. And the second one is DNB. So the full form stands for Dun and Bradstreet. Now what is the difference between consumer and commercial bureau? So consumer bureau is I am a consumer. A single person is a consumer. So they sell data of people. Then commercial is what? Let's say Infosys is a company. That is a commercial company. So they send the commercial data, and obviously these two, Experian and TransUnion, are also having some small entities, but they sell it with their own name. Like Equifax segregated it with PayNet, but Experian and TransUnion also sell it, but very on a small level because they don't have a very good name overall, a big name in that particular area. Now try to understand one more very important thing. Okay, this was all about the data bureau. Three main data bureau. Now in US, these data bureau sells the data to whom? To banks. Bank have their own data, that is application data from the origination of the account. Then they have transaction level. These two data are already with the bank. Okay. Now credit history is something which these three sell, like credit history. All these sell. Now bank is there, right? So bank try to combine this whole data, and they use maybe a primary key to join with this data. So on the basis of the primary key, they either have a hit or no hit. Now what is the meaning of hit? Hit or no hit. So if the bank is able to find a customer in the bureau data, that is a hit. If the bank is not able to find the bureau data, a customer in the bureau data, that is a no hit situation. Now these are data bureau, but one more very important agency is working in US. That is also a kind of a gold standard. Like in India, we have CIBIL score, but in US we have FICO score. This is the gold standard which bank always use if they want to check whether this any customer should be given loan or not, right? So they will check the FICO score of the people. On the basis of that, bank will give the loan to the customer. And how FICO do the calculation of score? FICO take the data from Experian, Equifax and TransUnion. Okay. On the basis of this data, FICO calculate a score. That formula is kind of a copyright, and the formula only FICO have. Okay, it's an individual organization. FICO use all these data bureaus to calculate the FICO score. Now FICO independently sell this score to the bureau back and to the banks also. So FICO is earning profit there, and all the bureaus are earning profit by selling the data to the banks. That is also very much clear to you. In FICO there is a range. Okay, so the maximum can be 850 and the least can be 300. So in between this has a range. So 300, the second is 620. There are brackets. Okay, after 620 there is a bracket of 660, then there is a bracket of 720. This is FICO score. If a customer is having this much of a score, that is a very good customer for the bank. Bank will immediately give them loan because there is no chance of default. This is bit moderate. This is more moderate. If the person, the customer is falling who is applying for the loan in this bracket, then usually they will no loan. Bank will not give them loan because they will not be able to pay this. So these customers are known as subprime customer as per FICO understanding, FICO standard words. Okay, this is the definition of the FICO score. Very important, all of you should know this. So this is subprime, and then you have this bracket which is near prime, and then this bracket is known as prime, and then this bracket is known as super prime. These people will get loan easily. These people will also get loan easily. Here bit struggle is there. Here mostly you will not get a loan. Now what is the difference in this bracket and this bracket between 850 to 750? They will get more loan with least interest. These people, this bracket people 720 to 660 will get maybe a bit lower amount of loan with a higher interest rate, because obviously they are the best people in terms of credit history. Okay, now this is also something you should know. Now to fight with this FICO score concept, okay, all these three bureau also came with a concept of vintage score, that we three will work together and we three will challenge FICO in market overall, but their range starts from 0 to 1000. But still FICO is the gold standard and all of you should know that. Okay, that's totally understandable at the moment. I hope none of you have any question. Okay, so if you have any question, do comment and let me know. So the range of this FICO, obviously I would like to mention one more important thing is that FICO score, the latest FICO score is known as FICO Report 09. This is the name of the latest FICO score in US. Now on that note, I think this was quite some understanding of very important concepts within banking. So you can thank me later in the comment section by subscribing to my channel also. And I would like to wish you all the best, because I try to keep content as precise and as realistic as I can. Okay. So on that note, I'll just give a quick recap. So we spoke about what are the teams model developer usually talk: model owner, model user, data owner, implementation team, and then MR team and external vendors, which are mostly your bureau. What are the role of them? I explained it already. Then we have data bureau. Data bureau are of two type: consumer, commercial. Biggest are three in consumer area. In commercial area, PayNet and DNB. PayNet is again a company of Equifax. So that's why Equifax becomes collectively a bigger name compared to rest of them. Make sense, guys, right? And then FICO is the gold standards, just like India have CIBIL, and three of the biggest data bureau also have a combination of score which they call as a vintage score, which is also kind of a replication of FICO, although in US market FICO is the most famous. On that note, I would like to take a leave from all of you. Please subscribe to my YouTube channel अगर आपको मेरा effort पसंद आया, so please hit the like button. Thank you so much guys, and I'll see you in the next video of this amazing credit risk playlist.